Good afternoon. My name is Keith Halls, and I'd like to welcome each and every one of you for part two of helping you to file your taxes for the year 2014. We're right up on the hour. However, we have quite a few people who've been joining in the last just minute or two. So what I'll do is I'll just kind of talk a little bit of just everything, and then we'll get started in just a second. I want to encourage each and every one of you that if you haven't seen part one, please go to ourglobalsuccessteam.com. And then if you go to ourglobalsuccessteam.com, you'll be able to see part one of the tax preparation that we're helping you with. And also, if you go to part one, some of the different not necessarily tax forms, but what I'll call spreadsheets that are very, very necessary for you to be able to use. You can download those that will help you not only in 2014, but even more importantly, in the year 2015. I'm going to begin first of all, and let's make sure I am going to begin. And I'm carrying this over from the slides that we did. In other words, if you were to look at last week's, you would see the exact same slides. So as I spoke, I broke it down because the IRS tells us that we have to have a record of, first of all the monies that we make. So I wrote down on this piece of paper, in this example, all of my weekly checks, all of my monthly checks, and then I total them. I use an Excel spreadsheet. I total them at the bottom, and then the total income part, at least the start of where we will, in order to get to net income, is right here. We're going to start with $7,740 that you brought in to your home during this year. Next, we also have to make sure, as I said last week, that we have good documentation for all of the expenses that we want to be able to deduct. If you can remember, again, an expense needs to be ordinary and necessary within our field for us to be able to deduct it. For example, if I wanted to drive a car to go to a meeting, that's a necessary and or ordinary expense that someone in our field would normally go to. So that's the type of expense that the IRS would be looking for to make sure that we wrote off. However, if I bought a brand new boat and I took some people out in it every now and then, would I be able to write that off? And the answer is no. As fun as it may be, you would not be able to write that off. I put down the exact same sheet for expenses that we had last week. And again, I categorized them by different categories so that I can place them on the tax forms. In this example, I have a category for airline, for hotel, for food, for advertising, for convention, for supplies, and then at the very end, I total everything up. I put down and I made up, in this situation, again, using an Excel spreadsheet, I can see that my airline cost for the year were $417.87. Now, one of the things that you'll know is I'm going to start talking in rounded numbers. The IRS allows you, of course, to round your numbers to the nearest dollar. So I'll be doing that for probably the rest of this call. So in this situation, the airline expense that we have is $418. Hotel, $334. Food, after I added together all my meals during the year, in this year, I put down that I had $61.85. And remember, with meals, you can deduct up to 50% of the amount. So my deductible amount that I'm going to put on the tax forms in just a minute is $31. Next, I have advertising of $219, convention of $209, supplies of $88, bringing the total amount of expenses on this worksheet to $1,298. Next, and very, very importantly, is the auto expense that we talked about last week. For you to be able to deduct the auto expense, and it's a very, very good deduction for you to be able to take on your tax return, you need to make sure that you have not only the date, but where you are going and the business purpose. The business purpose, make sure that you put that down, because I can promise you that in case you do get audited in 4 or 5 years from now, and they said, or if they were to ask you on July 18th, what was I doing in Denver? I'm not sure I remember us having a presentation with Tom like I've recorded here, so that's why it's very, very good to include people's names in places so that you can remember. Now, on the auto, and I took this directly from the worksheets from the IRS. You need to have a beginning and an ending odometer reading so that you can come up with the total amount of business miles. After I have the total amount of business hours for the given year, in the year 2014, I can write off 56 cents for every dollar which I drove for an ordinary and necessary business expense. In this situation, then, the number would be 2,724. Now, for the tax year 2015, or the year that we are in right now, the IRS has already announced that you will be able to deduct 57.5 cents for the automobile deduction during the year 2015. I always put on my odometer log, in my auto log, I put down what my readings were on the odometer at the beginning of the year and the end of the year. And the reason I do that is because when you go to, in just a second, we're going to go straight to the tax forms, you're going to see that you need to know how many miles that you drove during the year 2014 were personal miles and how many miles were business miles. So, knowing that we had the amount of money that we brought in just a couple slides ago of 7,740, and that our total expenses, once we include the auto expense, turned out to be 4,077, where do those then get placed, and on which forms do you place them? It depends, and just so you know, it depends on what type of an entity that you are. Are you a sole proprietor? And if so, that's usually one person working the business by themselves. And it can even be, in this situation, two people, as a husband and wife working together, but you would file that on a Schedule C. A Schedule C looks like, you can see right now, at the top, Schedule C for Form 1040 is called the profit or loss from the business. Now, for each tax return, not only do you need to put the name, but you need to put what type of business. So I put on mine, John Doe was involved in network marketing. Make sure you put down the right Social Security number. I just X'd it out. But what's next is very, very important. There's a code that the IRS has for just about every different type of business that there is. Putting in that correct code is essential. The reason is, by putting in that code, they already know what will be necessary and ordinary as far as the expenses go that you want to be able to deduct. The code, the business code that you need to enter right there for network marketing is 454390. That's 454390. After putting that on there, just about everyone, there's a couple questions they'll ask. Question number F, ask what type of accounting system are we on. Most people are on the cash basis. That is, we record income when it comes in and expenses when we pay for them. Then comes the question, did you materially participate in your business in the year 2014? Remember last week I talked about that there's 7 different questions that if you answer yes to any one of them, you did materially participate in your business. You want to be able to have that. So because of that, there's a material participation log that we put in our Global Success Team back office that you can download so that you can keep track of you working at least 500 hours during the year. So when it comes time to say, did you materially participate, you can check yes. Now, as far as where do the different income items go on this Schedule C, well, line 1 under income, gross receipts for sales. The gross receipts for a network marketer are the checks that we receive either on a weekly or on a monthly basis. Remember, we added the weekly and monthly together and we came up with a total of $7,740. Now, there's some people in some businesses that have to keep rather elaborate records for inventory. We don't, thank goodness. So the number on line 1 usually is the exact same number on line 3 and usually is the exact same number on line 4, or excuse me, line 7. So at this point, your Schedule C for John or Jane Doe, the income portion, they've completed. Now it's time to enter under Part 2, the expenses. As you remember, those categories that I listed are very important. Why did I list those categories? Because those are the categories that the IRS has put down that you can deduct. Now, that doesn't mean those are the only expenses you can deduct, as you'll see in just a minute. On this, I put down the advertising of $219. I put down the automobile of $2,724. We come down, supplies, I put down 88. And I know these numbers may be a little bit hard to read, but when you go to our Global Success Team, hopefully you'll be able to read them a lot more plain. For travel, I added, and you can do this together, I added together the airline portion of my bill, and I added to that the hotel, and netted together, it came out with the 767. The meals below it, again, I had to take the 50% amount, which was 31. Now, if there's any expenses on these that are any expenses, I should say, that are not categorized right here under expenses, you could then enter them on line 27A, which is called other expenses. In this situation, they didn't have a column or a category for conventions. So I put conventions down as an other expense. I come in, I add together all of my expenses, and they come out to be $4,077. I take the $7,740, I subtract from line 28 the $4,077, and I then come up, and there's a little bit, as you can see, because of rounding and everything like such as that, but I have put down as my net income $3,718. My Schedule C is now done. It's completed. It's ready to be placed on my Form 1040. However, before I place it there, I must first turn the page, and on the page, just like I said, for your automobile record, they're going to ask you a lot of questions, and so I simply put down in this example that since I started my business and pretending like on January 1st, that's when the vehicle began being used, I knew the total amount of miles that I had driven for business, and I knew the total amount of miles that I had driven total. So that meant that the others were just for my own personal use, and if they're for your personal use, of course you can't deduct them. Then the following questions come into play, and you need to be able to answer yes to these. Was your vehicle available during off hours? The most important was when you come right down to number 47A, do you have evidence to support your deduction? If you can't place a check mark on yes, they will not allow you to take that deduction. On 47B, if yes, is this evidence written? Again, you must be able to check yes on both of those in order to deduct the automobile. This is on the back of Schedule C. From there, we go to the self-employment tax. Since we earned income, we must pay self-employment tax. We showed you last week where the IRS stated that 99.9% of all people in network marketing will be, if they make money during the year, will have to pay self-employment tax. Just a second ago, from Schedule C, my net income was $3,718. Now, what I had to do was simply multiply it by 0.9235. The reason that they do that is they allow you to have a little bit of a deduction right up front. Then, with the number that's remaining, I'm multiplying the 3718 times the 0.9235, you end up with 3434. Now, at that time, there's two numbers that are very, very important. The first number is the self-employment tax. You multiply the number on line 4 by 15.3%, and that is the amount of tax, $525 you're going to have to pay for self-employment. At the same time, you take this tax, you divide it by 2, and this will become a write-off that you will put on the very front of Form 1040 on line 27. So now, let's transfer all of these numbers over to the Form 1040. First, my Schedule C income on line 12 was $3,718. On the front of my tax return, I was also able, I have a deduction that I can deduct from that $3,718, and that is 1/2 of the amount that I paid for self-employment tax, or $263. You take all your other deductions, place them there, subtract them against the $3,718. On page 2, I put down the self-employment tax, which was $525. Now, for all of you, You probably have other forms of income that you earn during the year, such as wages or maybe interest income, but all of those get added up and placed as you add everything together on the back of page 2. You determine then the tax on your income. The self-employment tax is an additional tax to the regular tax that you have to pay. Those two added together will be your total tax that you have to pay to the Internal Revenue for that year. Now, let's pretend as if you were, you had decided and you became an LLC. Remember, an LLC requires 2 members, and an LLC must be organized in the state in where you live. What you'll see is once you start to put the numbers on the partnership return, the partnership return is what an LLC must file. It is Form 1065. You must file an LLC on Form 1065. On line C, or in box C, again, it asks for that business code number, which I've already given out as 454390. And then it's actually quite easy to be able to determine your taxable income. It's on line 1, the first part, as you can see, has to do with income. I added all the income. We had 7,740. That's brought down is the total. And in this situation, on the partnership tax return, they don't really put very many categories for you to be able to put down your expenses. Most people have to add a piece of paper where they list all of their expenses. So I put down Form 1065. It's line, I should have put line 21, actually. Line 21, and then I add in all of the expenses just like I did on Schedule C. That then will give me the 4,022 minus the 7,740 will give me my taxable income of 3,718. It's the exact same taxable income that you had when you were filing a proprietorship. It's just now you are an LLC and you must file a partnership. Since there are 2 members in a partnership, you file a K-1 for each member. In the top, Part 1, you put the name of your LLC. I call this John and Jane Doe LLC. And then you put in Part 2 the partner's name. For example, this is Jane Doe. In Jane Doe, we put down her Social Security number. And since John and Jane Doe are equal partners, we took the income that they earned, the 3,718. We put 1/2 on line 1. We also put 1/2 on line 14. The reason for that is, once again, you'll have to pay self-employment tax from the K-1s. In this situation, you'll have a K-1 for Jane Doe and for John Doe. Those K-1s get added together on Form Schedule E for Form 1040. They're on the back side, or page 2 of Schedule E. If you will go to Part 2, under line 28, you put down each person that's involved, the amount they earned. It totals out to be 3,718. From that, you once again, just like we did before, now with the Schedule C, we put the income on line 12. With Schedule E, the income goes on line 17. the same amount that we had to pay in self-employment tax for a self-proprietorship holds for a partnership. We get a tax write-off of $263. However, we do have to pay an additional tax of $525. Now, I invite each and every one of you to go back, listen to this once again, listen to part one once again. And if you listen to them together, I think you'll be able to get a very good feel of, first of all, the things that you do need to do to take care of recording and keeping track of your income and your expenses. The final thing I want to make sure that I encourage each person on this call to do is while you are keeping your records during the year, you can see how much you have earned. And from however much you have earned, you need to send quarterly tax payments into the IRS. How much are those quarterly tax payments? That's a little bit difficult to say, but I'll give you some tips and ideas to help. You do need to make sure that you send in 15.3% for whatever, and that's the self-employment tax for whatever you earn as far as net income for that quarter goes. In addition, you take the income that you earn and you look at the previous year and you can see your tax rate, and you use that same tax rate, multiply it times your taxable income, add it to your self-employment tax, and then by making quarterly return and quarterly estimated tax payments, when tax time comes, you won't have to have a huge tax bill because hopefully you have paid everything in, and that also is a way of avoiding any additional penalties and interest the IRS may want to add. My name is Keith Halls. I want to thank each and every one of you for joining on this call tonight. I want to wish you all the very, very best, and I hope that this year is the greatest year you ever have. Thank you.